let me draw your attention to the latest data from the mutual fund space that you're seeing at the bottom of your screen. And I'm looking at the data release as well. This is for the month of June. And remember, usually at the end of a quarter, you see an outflow from overnight and short-term debt funds. This is something that has occurred once again, but I'm surprised to see that it's a lesser extent than what you normally see at the end of a quarter. So for the overall mutual fund space for the month of June, there is an inflow to the extent of 49,000 crore rupees, and a large part of that is coming through from the equity mutual funds, that is the pure play active equity mutual funds, as well as the hybrid mutual fund schemes. I'll delve a little deeper into each of these categories. First of all, on the equity category, there is an improvement in the inflows net basis. Though the gross inflows have more or less stayed the same in the month of June as well as in the month of May at about 57,000 crore rupees, the outflows or the redemptions have actually come down from about 37,600 crore rupees in the month of May to about 33,360 crore rupees in the month of June, as a result of which the net inflows into actively managed equity mutual fund schemes have come in at 23,587 crore rupees. Now, interestingly, the ones that have gotten a lot of interest over the course of the last several months, something like a sectoral and thematic category, which a lot of people tend to invest tactically into, the inflows are only to the extent of 475 crore rupees in the month of June, on a net basis, which is considerably lower than what you've seen in the past. For example, in some months last year, you saw inflows to the extent of 19,000 or even 20,000 crore rupees in just this one category. What else has gotten inflows? You have the small cap category that has gotten inflows on a net basis of about 4,000 crore rupees. You have mid caps that have gotten inflows about 3,750 crore rupees. And the large and mid cap also seeing a sizable 3,500 odd crore rupees coming through. So all of those categories, interestingly, even multi-cap has gotten inflows of about 2,900 or 2,800 crore rupees. But the biggest inflows in this actively managed equity category has come through in the way of flexi cap funds, which have gotten 5,700 crore rupees. I find it interesting that arbitrage funds in the hybrid category have also gotten a very sizable inflow to the extent of about 15,600 crore rupees, and that accounts for a large part of the inflows into hybrid mutual fund schemes. Now remember that arbitrage funds are being used by a lot of investors in lieu of the short-term debt funds, even though they're not necessarily like to like. They do give you a little bit of a spread above or a little bit of a better return compared with the liquid funds. All right, now beyond that, take a look at the passive space, and here you have index funds, which have gotten inflows of about 1,000 crore rupees in the month, and other ETFs, which in the past few months has actually been a focus area because a lot of people have been trying to tactically invest in ETFs, which is equity ETFs. We have inflows of about 844 crore rupees into this route as well. If you compare it with the previous month, though, it is a drop where in the month of May, you saw inflows of about 4,100 crore rupees into other ETFs. And this, by the way, is a pretty wide category. It also includes silver ETFs, which is quite interesting. Gold ETFs have seen an inflow in the month of June to the extent of 2,080 crore rupees, and that compares with just about 290 crore rupees of inflows in the month of May. So it's gone up. Of course, this is a period where you've seen elevated geopolitical tension. And remember, the month of May was a month where a lot of mutual funds were anticipating that there would be a little bit of a drying up of investments because of that uncertainty that did take place. However, you had the SIP numbers that were at an all-time high or very close to that. We've got Aashish Somaiyaa of WhiteOak Capital joining in to talk about the numbers somewhat. Aashish, I'll just run you through some of the headline numbers. Whereas in the month of May, you had inflows into active equity mutual funds to the extent of about 19,000 crore rupees. That has risen to about 23,600 crore rupees in the month of June, and you have sizable inflows into flexi cap as well as all of the broader categories, small cap, mid cap and multi cap, whereas thematic has seen just about 475 crore rupees of inflows. Is this something that you would have anticipated? There isn't too much in the way of NFOs either. So what is your initial read on the numbers when it comes to equity mutual funds? Aashish, can you hear me? Okay, so we'll try and get Aashish back. So broadly, it seems like it's a decent set of numbers for the mutual fund space. Of course, it's not anywhere close to record high inflows into actively managed equity category. But I would say that on balance, given that it's the end of a quarter and you see outflows to the extent of about 1,700 crore rupees from debt mutual funds, an inflow of 49,000 crore rupees into the mutual fund space as a whole is certainly a positive. Did you see the numbers? Does anything stand out to you?
I think the thing that stood out for me was the sectoral and thematic fund that you talked about. I think finally people have realized that, it's not the best idea to go ahead and invest in these thematic funds because it's highly cyclical and you need to monitor that constantly. So if you're just investing every month without actually checking your investment, it doesn't make sense, right?
Yeah.
The second thing is NFOs. If I'm not wrong, NFOs this month were also less in terms of launching. So that's quite a small number there as well.
I have the numbers.
But flexi cap is interesting because that's almost month on month 2,000 crore plus increase in that.
No, much more, 5,000 crore.
No, I mean the addition as compared to the last month. So that's interesting.
So we've got Aashish Somaiyaa. Aashish, can you hear me? Just checking.
Yes, hi Alexei.
Hi Aashish. So I'm not sure if you've gotten the numbers, but the headline that stood out to me is that there's an improvement in the inflows on a net basis into actively managed equity mutual fund schemes from about 19,000 crore rupees to about 23,600 crore rupees. And this seemingly is on the back of lower redemptions. The gross inflows have remained the same. And also, tactical investments seem to have dried up. And here I'm specifically talking about sectoral and thematic funds. The inflows seem to have come through from flexi caps as well as multi caps and even small and mid caps. What is your reading?
Yeah, Alex, I think, if you look at, say, for example, a couple of months back, in general, you see this whole cyclical behavior. If you see, say, months like April and May, one saw probably less confidence. One thing I'm noticing is that the gross inflow seems to be declining. If you see, say, September last year or August last year, you must have seen that if you just look at equity and hybrid funds, that is the active element. I think at the best time we saw gross inflows like 75,000 crores. And I think in recent times, the gross inflow has been kind of going down. And at the same time, I heard you mentioning that redemptions have gone down. So what is happening is that while gross inflows are going down, redemption is also going down, and that is what is resulting in buoyancy in the net inflows. That is something which is, interesting to watch. Second, I think clearly, confidence is back. You can also see, my expectation is that if you look at, say, for example, July, you will again see gross inflows going up. And I think this is somehow more correlating with the market behavior, which is giving confidence to people. So my sense is numbers will improve further from here on.
Just a quick check, and I'm sure that you yourself have a pulse and you do your channel checks. In terms of the big investors into mutual funds, I'm wondering what the flows are, because in the month of May, a lot of people anticipated that there would be a little bit of a cautiousness because of all the geopolitics. And you mentioned that seemingly things are going back to normal. Do you have a sense of how retail investors have behaved and how maybe the HNIs have?
No, that's difficult to kind of difficult to get a breakup of that. But Alex, to the extent that a large part of our retail base is more the regular investing type, it's counterintuitive. But my own sense is that the retail flow is a lot more sustainable and a lot more consistent. Whereas I think it will be the high value flow which will probably be which anecdotally my sense is that is the one which is more inconsistent, if you really ask me.
Okay. The last point with regard to fixed income funds, I find it interesting that you've seen a durable shift seemingly into arbitrage funds,
Yeah.
and I'm thinking that a lot of retail money is going into arbitrage funds now. But at the end of the quarter, Aashish, you normally see a significant outflow from the shorter term debt funds, but I'm seeing on a cumulative basis, fixed income funds have only seen an outflow of about 1,700 crore rupees on a net basis. What explains that?
See, I think, Alex, out of the 1,700, I think a big part is liquid funds. So I wouldn't really read too much into it because liquid funds have the biggest overnight funds and liquid funds. So if you adjust for overnight funds and liquid funds, actually the buoyancy in interest rates has resulted in money flowing across. Like, you could take these short-term bond funds or you take corporate bond funds. They actually have a handsome net inflow. And bulk of the negative is actually accounted for only liquid and overnight, so wouldn't really read too much into that. But yes, on the overall point that fixed income funds have lost material numbers over the years, and that money is not only moving into arbitrage. If you really ask me, let's say, for example, you take conservative hybrid funds, that category has some 30,000 crores. If you look at multi-asset, dynamic, balance advantage, I think bulk of the fixed income flow is not only going to arbitrage, because arbitrage you can see now is nearly 3 lakh crores of assets almost. But even hybrid funds with varying proportions of equity, they are also the ones who are witnessing big gains in terms of inflows.
Just one last point, and not asking you to comment on a specific player, but I'm referring to the significant inflows into the passive space because of a couple of new fund offers that got closed. And I'm guessing that those numbers will come through in the month of July. I'm just wondering whether you anticipate there to be a churn, or do you think that new investors are coming into the fold because a new player has entered, etc., etc., and so you see overall AUM going up?
Yeah. See, my sense is that, if you look at number of investors, number of accounts, number of investors, I think the industry itself is growing leaps and bounds. And I think diversity of players and diversity of strategies will only bolster that further, I have no doubt. But when you look at the rupees crores value, I think that would probably be more explained by churn rather than, because it's only logical that you will not have so many institutions and corporates or family offices just coming into being in a short span of time. But definitely, as far as number of investors are concerned, any which way the industry is growing leaps and bounds month on month, and then of course new players and new strategies only augment those numbers. The base of investors is bound to rise. But assets, I think, yes, there will be gains and losses of market shares.
Interesting. Thanks for that perspective, Aashish. Always a pleasure speaking with you.
Thank you. Thank you, Alex.
Okay, by the way, just a little bit of context. I didn't want to ask a specific question to Aashish about a specific mutual fund, but then you need to know. And I was speaking about the introduction of a couple of new fund offers and the closure of those new fund offers for Jio BlackRock. They have mopped up 17,000 plus crore rupees in the new fund offer stage. And so what I was asking was, do you anticipate that this is new money coming through, or do you think that there will be a churn within the system? And you got the answer.